SPAC redemptions, it's sort of been a story that's caught my eye, and it continues to be one in the. And also, I just do it because of that.
You just wanted that to show up on the TV screen.
Well, also the sound. Really, it's actually more
That's
the
like
sound.
when Pac-Man gets eaten by the ghost,
Yes,
right?
yes. I just love it. It's not quite as good as Johnny Gilbert introducing the Faber report, but we won't do that today.
Wow.
But we do have a couple more on the same theme, which is basically you're seeing these redemption rates. They're enormous, 90-95% of shares in SPACs being redeemed, leaving very little cash for the companies. They take in money from a pipe if there is one, but in the trust account, what's left? Very little, and so they are violating the minimum cash requirement, which needs to be waived by the company itself, and or they try to do different things. There's a look, by the way, at the CNBC SPAC 50, and we can go through any of those. But two I'm talking about today, Spring Valley Aero Farms. People may have heard of Aero Farms, from vertical farming. Newark, New Jersey is where they're based. They raised a good amount of money prior to doing their SPAC deal, if I recall. Deal was approved by shareholders, but yet again, because of redemptions, they don't tell us the number here. They simply say as a result of redemptions, the minimum cash requirement in Spring Valley and Aero Farms agreement and plan of merger hasn't been satisfied. I'd heard they might be as high as 85% or more, but we don't have a number here. And so they're looking for more money, essentially, so that they can actually close the deal. It was approved by holders, and that's the other thing. You get these enormous redemptions, but you still get approval of the deals, which seems somewhat odd, although, again, I pointed out in merger and risk arb, we see that, or merger arb, you see that as well, or deals, I should say, where record date, you vote in favor, then you sell your shares. But that one, they're seeking additional sources of capital, and they're hoping to actually close it by the 24th of September. The other one, smaller deal, Centricus Arctic Quantum.
Oh.
That vote's set for today. Do you know that?
I do know this name.
Okay.
Virgin Orbit is an investor in this.
Oh, are they?
Yeah. It's quantum computing from space, essentially. Intersection of cybersecurity.
Thank you. See, it's always good to have an actual idea of what these companies are involved in, because I'm focused so much more on just, again, redemption. 32.4 million. Now, let me put that in perspective. I think there are only 34.5 million total shares in the SPAC. So that's what we're talking about. Do the math. It's over 90, plus way over 90% saying, nope, want to take our $10. So they had another investor that was already part of the sponsorship group coming in, I believe, Heritage. They're going to buy 2.2 million of the shares that were submitted for redemptions and unredeem them, essentially. So that'll raise $22 million. They're paying $10 for that. But they're also getting another $2 million in essentially sponsor shares. So you're seeing the sponsors start to do some things here to try to make sure that they can have enough cash at the beginning. Even if they violate the minimum cash requirement, there is an agreement here, for example, that they're willing to go down to 150 million, excuse me, 100 million from what had been 150 million in minimum cash. But the sponsor giving up 2 million shares to Heritage for them to come in and buy. And a lot of different things need to be done here. This is reflective overall of investors don't like SPACs right now.
Right.
Yeah.
They just don't.
Shepard Smith here. Thanks for watching CNBC on YouTube.